Welcome back to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. Online, as always, zinniawealth.com. How do you spell that? Zinnia wealth.com. And you can see on the website there's a gold box. It says complimentary retirement consultation. What does that mean? That means it's a free meeting to sit down, get your questions answered, and talk about your concerns about retirement. Let's get that conversation going, get a date on a calendar, and start to do the math on your retirement. Give Charisse a call, 833-368-3680. All right, we're going to dive in just a little bit here on how Charisse puts together portfolios. And, you walk in and say, okay, Charisse, how would you invest this money? I found an article in Investopedia, and it talked to a financial advisor, and they said what you should do with this is start with the job, not with the product. In other words, asking you, what do we need? Do we need income? Do we need long-term growth? Do we need short-term growth? Do we need tax-favored savings? All these different things. You hear people say, look at the end and work backwards. Is that something that you do? Is that a philosophy that you kind of follow, something that you put in there?
Well, if you're 200 pounds and you want to get to 160, there's a mixed bag of strategy there. Right?
Okay, well, yeah, but you have the end in mind. I want 160. Yes. Okay, so now we know what the end of the journey is. How do we get there? Okay, I got it.
Right. And the problem is most people, you walk into them. Let's say you walk into a big bank or brokerage firm. You bring your statements. You're looking for a second opinion. You just left your 401k. You retired. You walk into this big bank or brokerage firm because they're big and they're probably a good company, right? And you walk out with a portfolio that's full of stocks and bonds, maybe a CD, and that's it. They're selling you a product. They're selling you some mutual funds. And so instead of that strategy, I call that the old school strategy. That is your grandpa's strategy. Listen, we don't do that here. What we do is we build out that you want to be 160 pounds in 10 years and you're 200 pounds now. We're going to build out a strategy. And the only person who could screw it up is you, right? Or the person who's actually managing your strategy, if they're a bad personal trainer, right, or they're just not doing their job, right? Most personal trainers are always doing their job. But the same thing with the advisor. So if you say, hey, I have $1 million here, Charisse, and I'm getting $50,000 in Social Security, but I need another $50,000 to spend for the next 10 years, I still want my $1 million to grow while I'm taking $50,000 out. Well, I have a big job because if you have $1 million and you're taking $50,000 out, that's 5%. And you're supposed to follow the 4% rule, not take more than 4% so you don't run out of money. But you're lucky you sit with me and not a typical stock jock, because we will implement the plan. We will get you that $50,000. Your portfolios will grow because we're not just doing a 60-40 mutual fund portfolio or a 60-40 just stock portfolio. We are building things that create an inflation adjustable income. So you're going to get more money every year if you need it, but it's built into the plan. And then we're going to have probably 6 to 7 different buckets doing different things. And one of those buckets is a 60-40 portfolio. So yes, you're still going to get that 60 portfolio the stock jock's going to get you. But we're also going to build in other things that we know that you're going to need as we're helping you build your retirement by design. It has to be designed. It is not cookie cutter. I am so tired of the cookie cutter world, Randy, because we work so hard here to design your portfolio, and 3 people can come in one day and all 3 people have a totally different plan on when we turn it on and if we need to build income or if we need more growth or more of a tax strategy, a dividend strategy, right? So it's important to us that when you are retiring, you're retiring by design, not by hope, not by just a basic strategy, because it doesn't work as well. And I can show that to you.
Well, one of the things about retirement planning, I got to believe, is people come in, as you say, and they all have different needs and they all have a different idea of what they need from someone like Charisse. Somebody might walk in, you might walk in and say, all I need is my money to move forward. I need growth. And it's all about investments. But somebody else might come in and say, Charisse, I'm worried about long-term care. I'm worried about health care. I'm worried about taxes in retirement. I'm worried about legacy. I don't have that part nailed down. That's looking at the end in mind, going way down there and saying, okay, let's solve those problems as well, and then get that investment plan for you as well so you have the income that you need. You're going to go about it differently than anybody else. When she says no cookie cutter, that's what it means. That means your plan is going to be different from anybody else's. Let's sit down and build your plan. Do your retirement math. Here's the number, 833-368-3680, 833-368-3680, or online, zinniawealth.com, ZINNIA wealth.com. What does that do? Let's get a date on a calendar and start the conversation. Talk about your concerns and what you want from your retirement plan, what you need, what you're thinking about. What you've done, what do you want to do? Let's put it all together. 833-368-3680. Well, I looked at this headline, Charisse. It says millions of Americans spend decades saving for a retirement only to trip over tax bills at the finish line. So it talked about the three different kinds of money that we bring into retirement. There's the pre-taxed stuff. That's your 401ks and your IRAs. You've never paid taxes on that money. Then there's the after-tax or tax-free money. If you have a Roth, you've already paid taxes on that. That's tax-free in retirement. And then the taxable accounts. So pre-taxed, after-taxed, and taxable. We got all that going on at the same time.
Yes.
So I'm thinking like a pie here, Charisse. Should my pie be 1/3, 1/3, 1/3, or how do we mix this up? Does there come to a point when I've been plowing money into a 401k and you look at me and you say, no more? We got to have a different kind of money. How do you deal with this?
So we teach this in our workshops. It's a very heavy tax conversation. And there's three buckets. Think of it as the pink bucket. That pink bucket is your 401k, your IRA, all the tax deferred dollars you never paid taxes on that you saved with the employer, right? So that's the pink bucket. And then we have a yellow bucket. That's your brokerage account bucket. That is, let's say you buy some stocks because you just sold a house. And you're like, Charisse, I have $100,000 and I want to buy some stuff. So you put it in this yellow bucket, the brokerage account bucket. That's the taxable bucket. So that's different than the pink bucket, which is the tax deferred, because that was your 401k and IRA. The yellow bucket is your brokerage account bucket. And we have to be careful what we buy in there, right? Because there could be dividend stocks and you have to pay taxes on it every year, and or you can just do growth stocks where you don't pay taxes till you sell. So the question is, should we have more in the pink bucket or the yellow bucket? And then there's the third bucket you're talking about. That's the tax-free bucket. I call that my black bucket. It is my favorite bucket. And by the way, my favorite color is black, but I wear lots of bright colors these days. So remember that. Favorite colors are black, and the black bucket's my favorite because those are tax-free dollars. My goal is to move you from the pink bucket, that tax-deferred 401k IRA, over to the black bucket, my favorite bucket, because all those dollars, as long as you've had it for 5 years and you're 59 and a half and older, it's all tax free. And so why is that so important? Because over time, over the next 30 years in retirement, you are forced by law to pull a higher percentage out of those IRAs every year, that pink bucket, which is going to cost you a whole lot more in taxes over 30 years in retirement. What if you were to roll that pink bucket money over to the black bucket money over the next 10 years and you only pay taxes for 10 years and you live 30 years? And then later on, taxes go up. You're like, wow, that was the best strategy in the whole world, right? But to move money from the pink bucket to that black bucket, so that tax deferred bucket to the tax free bucket, you got to pay taxes that year. And I'm going to show you how to do that. But let me go back to my yellow bucket. That's the in-between bucket. Because your question, Randy, was how much should you have in each bucket? Well, when most people retire, if you have $1 million, you have approximately $800,000 in the pink bucket. And you have approximately, I would say, an average of 100,000 in the yellow bucket, the brokerage account bucket. And then you typically have, maybe if you're lucky, 100,000 in the black bucket, the Roth bucket, because the 401k is where you shove all your money your entire life. So what we want to do is, if I had a choice, I would move 100% from your pink bucket to your black bucket, and we'd have no more pink bucket.
Gotcha.
That's your tax deferred 401ks, and move it to the Roth IRA. But a lot of times, some people just there's other things they need. So once in a while, we'll move it from the pink bucket to the yellow bucket, right? That's the taxable bucket. It depends on quite a few things. So we always want to have a little bit of that yellow bucket because we can do tax loss harvesting on that bucket to give you income in the short run, as long as the timing works out without having to pay taxes. So tax loss harvesting, most advisors don't do it. Your CPAs will charge you a fee to do it and won't do it for free. So again, it's a little confusing, but just remember, pink bucket, yellow bucket, black bucket. Charisse wants your money in the black bucket. And not everybody should do that, by the way, because when we do the math, sometimes the math says otherwise. So let us do the math. And at least moving forward. And you can move money from that pink bucket to the black bucket anytime you want, by the way.
Yeah, we've said this a couple of times today that your retirement plan will be different than anybody else. If someone comes in and they've got a nice pension and Social Security, their income needs might not be that much, but their tax needs might be something big. And then you might be completely the opposite. You've got all sorts of 401k money, but no pension and Social Security. Now you have an income problem, and we have to move things over to that black bucket that Charisse is talking about. Everybody's going to be different. Let's figure out what you need in retirement. Is it income? Is it tax planning? Is it all of the above and all the different things that we talk about here on the show? Give Charisse a call. Let's figure out what the needs are, and let's start moving the plan forward. Start doing the math on your retirement. 833-368-3680, 833-368-3680, or use the website, pretty easy, zinniawealth.com, ZINNIA wealth.com, and hit the gold box. You'll be on your way. Charisse, that is all the time that we have on this one. I will give you the last word.
Well, as usual, live by design and not by default. And we'll see you here next week.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.